SoFi finished the week strong, but is this a buying opportunity? Now, I have been bullish about SoFi since the stock was only $6, but SoFi stock hit over $18 in January for the first time in over 3 years. If you follow the stock, then you know just how much SoFi is growing, but for most of 2024, SoFi stock had been dropping despite the company doing better than ever and making better profits than before. Stick around to discover how you can make the most of this pivotal moment in SoFi's history. But before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 1,000 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. It's still a growth company with huge potential and still at the very early stages and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very, very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. SoFi's next leg higher is coming. Now, this is a very good article on Seeking Alpha, but before we look at this, let's just take a look at the overall sentiment of SoFi stock. Here we can see the SoFi Analysis articles, and the majority of these are extremely bullish, with only a single bearish article from an analyst with just 100 followers. But this analyst whose name I'm not even going to try to pronounce, he's been analyzing SoFi for a long time, and his ratings are pretty damn accurate. Since his last strong buy call on SoFi Technologies, the stock has underperformed the market, but the pullback has coincided with a very fearful overall market. This provides more accumulation periods before it makes new highs. And guys, this is what I always do. I read lots of different articles about every single stock. I read as many different perspectives from as many different authors, and this is especially great with Seeking Alpha, as you can see very clearly the track record of these analysts. It's very easy to find which analysts will make accurate predictions and which guys will make you money if you follow them. And not only that, but if you find an analyst that you like, you can easily check out their experience and their other stock picks. Like this guy runs an AI-driven stock research platform. He's a chartered accountant who has previously worked with Deloitte and KPMG and has years of experience. Now, I didn't mean to try to turn this into a promotion for Seeking Alpha and their analysts, but I did make a video yesterday talking about how I use Seeking Alpha and its best features that helps me discover the best stocks before they go parabolic. So check out the video that's linked in the description to find out how Seeking Alpha can supercharge your portfolio. And of course, there is a major event coming in a few days, so make sure to use my discount code to get $30 off premium. Anyways, back to this article. I won't read the full article here, just go through some important points. And there is a link to this in the description below for anyone who wants to have a read of the full article. SoFi surpassed 10 million members in 2024. Now, we already know this. SoFi massively increased revenue year over year. They originated $23 billion in loans, lowering balance sheet risk while maintaining revenue streams. A price target of $17.25, RSI of 53, and a rising VPT. Revenue is projected to grow 27% year over year, driven by fintech expansion, improved monetization, and a capital-light growth strategy. So let's talk about this price target first. Bullish signals emerge despite seasonal weakness. This aligns with the Fibonacci extension level. Now guys, I'm not an expert in this sort of technical analysis, so bear with me for a moment. The optimistic target is $20, which is in line with the Fibonacci, while the pessimistic scenario of $12 aligns with the 1 Fibonacci retracement. There is a likelihood of upward movement if bullish momentum resumes. The RSI is 53.3, which reflects a neutral to slightly bullish stance. This indicates that SoFi has not yet in an overbought or oversold territory. The presence of a bullish divergence suggests that price strength can be improved despite the RSI line trending downwards. This signals the potential for an upcoming rebound if buying pressure increases. The volume price trend also supports the case for an uptrend. The VBT line is currently rising at 223 million, well above its annual moving average of 285. This suggests increasing buying interest and potential accumulation. However, monthly seasonality is not so good. The historical weakness implies that short-term volatility may persist. Although the technical setup is good, seasonality factors and RSI trends signal price weakness. Now, the next part of this article is about how SoFi has again extended its member base, and SoFi's product adoption has followed a similar upward trend, but we've already talked about this. Furthermore, SoFi's premium membership tier, SoFi Plus, has expanded accessibility by offering members a suite of benefits like high APY savings, cashback incentives, and investment perks. But interestingly, a major development was the expansion of SoFi's lending platform business, which has generated 2.1 billion in loan originations. Overall, these business developments may continue to produce top-line growth for SoFi. For Q1 2025, the Street expects 27.5 year-over-year top-line growth for SoFi, ahead of management's expectation of 26%. Then there is this negative. Despite a positive top line, the state of the PS ratio is above long-term averages, but the premium is justified based on the projections. Now, this author points out one big risk here. SoFi is increasing its exposure to home loans. Home loans typically have longer duration risk, lower yields than personal loans, and higher sensitivity to rate changes. So if SoFi misprices these loans or say encounters higher than expected delinquencies, then this could impact the overall bottom line. And in the current economic climate, this does appear risky. Finally, the company's focus on grow the balance sheet modestly in terms of single-digit billions indicates that asset growth will slow relative to prior years. This can potentially constrain top-line expansion. But the key takeaway here is that SoFi's shift to fee-based revenue and a capital-light model strengthens its long-term outlook. With strong membership growth and a $17 price target, bullish signals point to further upside despite short-term volatility. But what do you think? Leave a comment down below. So this is a great little article that is well worth a read. 3 reasons to buy SoFi stock like there's no tomorrow. So the key points listed here are: SoFi's banking success could make it a more efficient business. SoFi's technology platform is getting some big wins, and SoFi is doing a great job of building its third-party loan platform. Now, anyone that is critical of SoFi recently or feeling that the stock has become overvalued since their earnings report a few weeks ago must have forgotten just how far this company has come over the past few years, and that SoFi is still tiny compared to where it can go. Since going public in 2021, SoFi's membership base has increased from 3.4 million to more than 10 million, and it has evolved from a relatively small lender into a full-featured online bank. But SoFi is still tiny. Just for context, SoFi has roughly 1% of the deposit base of Bank of America. And remember that the US adult population is over 340 million people, so SoFi has just 10 million customers. That is less than 3% potential market penetration so far. First of all, SoFi is building a capital-light, low-risk revenue stream. SoFi makes billions of dollars in personal loans with its own capital and has recently started to build out its loan platform business, which originates loans on behalf of third parties and offers loan servicing on a third-party basis. This generates a stream of capital-light fee income for SoFi without adding to the credit risk, and it is scaling at an impressive rate. In the fourth quarter, SoFi originated $1.1 billion in third-party loan volume. The loan platform business produced $63.2 million in fee income from this, which is a portion of SoFi's revenue that could get significantly larger in the next few years. Secondly is SoFi's technology. SoFi has said that it aims to become the Amazon Web Services of fintech. In other words, it wants to provide the infrastructure for other companies' fintech needs on a wide scale, and the main way it wants to accomplish that is through its Galileo platform. In 2024, the technology platform's contribution profit grew by 34%, but this is still just the start because Galileo is having some big wins recently. First, the platform was selected by the US Treasury Department as the processor for Direct Express prepaid debit card program for federal benefits that are used by 3.4 million people. It also signed an agreement to power existing and new capabilities for a large US financial services company. And then we've already talked about Galileo has signed an agreement to power a co-branded debit card program, which is the first of its kind on SoFi's platform. Thirdly is that SoFi's efficiency could improve sharply, and this is a very important point. The most rapid growth within SoFi's business in recent years has been on the banking side of the business. In 2024, the number of SoFi Money customers grew by 51%, while the number of personal loans grew by about half of that rate. Now, this might not sound good, considering how the company's lending products are the key profit drivers. But this has created a more productive business structure that should allow SoFi to become far more efficient. As the financial services side of the business grows, it creates more of a natural marketing funnel for the company's loan products and third-party loan platform. Customer acquisition has been a cost that SoFi needs to improve, and the more opportunities it has to sell products to existing customers, the more efficient this process can be. Now, I've been shouting about this for the past 12 or maybe 18 months. It is SoFi's continued and growing ability to cross-sell its products that will make this company more profitable. And there are plenty of other potential catalysts that could drive SoFi stock higher, such as that the company is just starting to scratch the surface of its potential when it comes to the credit card products. Plus, the company could also see margins expand sharply as interest rates gradually come down. But guys, what do you think? Is SoFi still a solid investment now for 2025, especially with the stock having pulled back from its January highs? Or do you think that we should expect this to drop further? Let me know your thoughts in the comments below. But always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on X and I'll catch you in the next video.